Attention San Clemente homeowners. After a few crazy years, our housing market is in the midst of a transition. Stay tuned to hear what's going on. Hey there, I'm Ryan Schramm. I'm the broker and owner of Ryan Schramm Real Estate here in San Clemente. Thanks for watching. All right, so there's a few key things that's happening today in the housing market that I wanted to mention. The first thing that I'm seeing, rapidly rising interest rates. So when rates rise, that means buyers' affordability declines. Buyers are able to afford less on their monthly payment. It's obvious, it makes sense. Where the rubber meets the road is people are no longer able to offer as much for the same property now that the interest rate has risen. How much have they risen? According to the Mortgage Bankers Association, rates have gone up. From the beginning of this year, they were 3.25%. Today's rate, 5.25%. 2 full percentage points in the matter of a few months. So what does that mean? Persistent higher rates, that's gonna cool demand down. Getting back to that affordability, if people can't afford as much, it's gonna take some people down in their price point, it's gonna take some people out of the market, it's going to cool the demand down. All right, on to inventory now, the supply of homes. What are we looking at for supply? The current active inventory for all of Orange County has risen 60% since January. Now with that said, that number that it's risen to is still well below the average for this time of year, but things are starting to catch up. In San Clemente today, there are 56 available listings and 77 homes in escrow. All right, so let's talk demand. Demand is simply the number of new escrows this month over the prior month. So what we've already seen this month is that there's fewer homes going into escrow. It's important to differentiate between demand as a sale and demand as, hey, there's this many people out there that want to purchase. So if we're just talking about homes in escrow this month versus last month, that demand is starting to go down. It's down by approximately 2%, but it's the first time that we've seen it go down, which is what's important to understand there. So what does that all mean? Typically this time of year, that's when demand is firing on all cylinders. The spring housing market demand is typically rising. We just saw for the first time in a long time that demand took a dip. So that's very interesting altogether. According to the Orange County Housing Report, it feels like our demand for housing reached a premature peak in late winter, early spring, rather than riding upwards into the highest level of demand like we normally see in the spring and early summer. All right, so something else very interesting that was just published in the most recent Orange County Housing Report. 15% of the listings that are available today, this means they're on the market, they're active, they're available for somebody to purchase. 15% of those properties have done a price reduction. Can you imagine that? Like, we haven't seen price reductions. That's been a thing of the past. For the last couple of years, most people, if they're trying to sell a house, they put it on the market, get multiple offers, and it sells. So 15% of the available inventory has pulled the price back. That's happening for a few reasons, mainly the interest rates rising like we talked about, but also you have a little bit of a lag in the market where people who are listing their homes now have seen the market just go up, up, up. They've seen homes in their neighborhoods selling for incredible numbers, and when it's their turn to put their home on the market, they're listing for an arbitrary number or a number that is just ridiculously too high when stacked up against the most recent comparable sale. So that's common, and where that might have worked for the last couple of years, that is no longer an effective pricing strategy. A seller must be very calculated now when going to put their home on the market and calculated with their pricing strategy. And finally, I always like to give an update on foreclosures or short sales. Currently, there is only one foreclosure on the market and no short sales. When you look last year, there was 11 combined short sale and foreclosures, so those are virtually non-existent. All right, to sum everything up, the housing market is changing, it's shifting. We thought this would be happening. We've been talking about how the Fed's been wanting to raise the interest rate, and they have very aggressively. To recap, from 3.25% up to 5.25% in a very short amount of time. and that is shifting the housing market. You have to be, as a seller, calculated in how you price a home. As a buyer, you're still gonna face a lot of competition. The silver lining for a buyer is you might not have to offer as high over asking price, or you might be able to negotiate a little bit. Imagine that. You as a buyer get to negotiate a little bit. So this is something I believe that was needed. We needed to cool demand because we're at such a blistering red hot pace, and it's working. Now I want to watch very closely how much will the Fed continue to throttle the rates and what is the ripple effect in our housing market, and I will be keeping you updated. Thanks so much for watching.